Okay, folks, welcome back. Here we have the JPY chart in front of us. Something that was requested by one of the loyal subscribers I have to Liquid FX, and this is exactly what I'm going to be doing. So please, if you have any charts you want me to go over, feel free to drop them in the comments. Feel free to message me on Twitter or Instagram, and I'll be more than happy to facilitate any particular markets that people want me to look at. So here we have the NZD JPY chart in front of us. And I'm going to be going over a higher time frame down to a 4-hour time frame outlook as to where I think this particular market is going to go. Excuse me. So what we have over here, we have currently a swing high. This is a weekly time frame. So what we have over here is we have a swing high, which dates back to 2007, and we have a swing low down here. So from a weekly time frame perspective, what we need to understand is we are currently dealing between this swing high and this swing low. So the first thing you want to do is you want to identify your structure. So what we had over here is we had price giving us minor bullish structure over here to the left, and now since then we've had the low that's been broken over here, right? So the way that I'm looking at the structure, because the first thing we look at is our structure, right? So we have a swing high and a low, high, low, high, low, high up here, the all-time high and the all-time low down here. So currently we've identified our structure. The next thing we need to do is look at our premium and discount arrays, our PD arrays, using the most recent and relevant dealing range. So our dealing range, as I established, is essentially from this swing high up to this swing low down here. So what we have over here is we have price giving us a dealing range. And so what does this dealing range tell us, right? So this dealing range over here indicates that we have an equilibrium up here, in the middle. So we have the equilibrium, or the 50% level, which represents the midpoint between this swing high and this swing low. So anything above the equilibrium becomes a premium, right? And anything below the equilibrium becomes, you guessed it, a discount, right? So what's our job as a trader, as an analyst, once we have this information? Our job with this information is to simply depict where the next price, where price will go to from a higher time frame outlook, from a higher time frame perspective, right? Using this weekly time frame, okay? So I'm going to label this on the chart as well. So this is the weekly time frame, okay? So from here, how am I looking at the chart? So let's dive in deeper to price action. Now, the first thing you want to train your eye to see is where is the next draw on liquidity. So the answer to that question is over here. This is the next draw on liquidity over here. And we're very close to reaching this point over here. So this is the next draw on liquidity, right? So at the price point 94.383. So I'm going to label that over here as well. 94.383. So roughly 94.4. And the reason why that is the next draw on liquidity on the weekly time frame is because when we look at price action here a little bit more carefully, we have a high over here, right? We have a high over here. Now this high attempted to make a new low, and as you can see, it failed and stopped over here. Because remember, the low is all the way down here. So once we have our low over here that's been established, what we have over here is we have a weak low. This is a weak low over here. And this weak low was produced by this weak high. And so we understand that price is heading higher. We've seen price in this uptrend since 2020. So since the COVID pandemic, we see prices heading higher and higher and higher. And we're very close to this weak high over here. So what I expect, right, what I anticipate, from using ICT concepts, the draw on liquidity is bullish. So I do expect price to get beyond, up and beyond the 94.383. So I expect price to smash through the 94.4 level in price, okay? Simply using the fact that we have a weak high over here. This weak high has failed to make a new low, because remember the low is down here. And so because of that, with current intraday and daily structure, we're going to go down to the daily time frame. I expect this weak high over here to be broken. So let's go down to the daily time frame and see how we can depict this bullish market further, right? So first, it's important to understand, again, we start with our three most basic principles, right? So everything here follows this routine, right? This routine when it comes to analysis. So we have our structure, we have our PD arrays, and we have our potential fair value gaps, right? This is how we look at the time frame. This is how we look at all time frames when it comes to building a bias, but also for entries, which we're not going to go over in this video. So what we have over here is we have structure. So we have the daily structure being marked out as such. We have a swing high, which gives a swing low. We have a swing high and a swing low, right? And we have a swing high, swing low. And this swing low produced a swing high up here. Then we had a low, high, low, high. So now if we dive into most recent structure over here on the daily time frame, it's pretty obvious which direction the trend is going. what we established over here is we established a breaker structure. So the last high over here gave a breaker structure over here. So this is the first thing we established in our analysis, right? We start off with our structure. After structure, we go on to what? Our PD arrays. We go on to our PD arrays in price. So where is our current PD arrays, right? So we're currently dealing between this swing low and this swing high up here. So we currently have a swing high and a swing low to deal with, okay? So we have a swing high just over here, and we have price giving a swing low, which is down here. So this is our second rule that's been established. We start with our structure, we go to premium and discount arrays, and the last thing we want to be looking at is potential fair value gaps or inefficiencies in price. So where are those inefficiencies? Let's dive in and have a look, right? Now, we have an inefficiency just over here in this region. So this then becomes our daily point of interest, our daily POI. Okay, so what makes this a valid POI? So POIs are typically marked out in gray. So this is our POI. So this is our daily POI. So what makes this a valid daily POI? Why is this an area of interest or a point of interest? Well, simply put, we've had a breaker structure. This is our first rule to an order book. So we've had our breaker structure. We understand that price is in a discount below the equilibrium. So price is in a discount. So this is rule number 2. Price is in a discount. And rule number 3 is that price is left a fair value gap just over here. So 3 represents a fair value gap in price or an inefficiency. The inefficiency is around this region over here, right? So this region over here highlighted in dark blue represents the inefficiencies and fair value gaps in price. So what do I think price is likely to do, right? We could very, very likely see price react off this daily POI, this daily zone, which is roughly at the price point of 90.25, 90.26, and we could just see extended higher prices from this region. And remember I told you the weekly drawn liquidity is all the way up here like we established from the weekly time frame. So this is our draw on liquidity all the way up here. This is our DOL or our draw of liquidity. So the way that I'm currently dissecting this market is we've got bullish structure on the daily time frame, and so because of that, we could see price tap into this daily POI and just head higher, continuing all the way up to this daily DOL zone. DOL, draw on liquidity, right? That's one particular scenario. Now, if we were, again, we should consider both sides of the market. If we were to continue lower from this zone and break the last daily low, so if we were to break below this point, then there are some potential scenarios we should be aware of, right? We haven't got any inefficiencies in and around this local region over here. The next inefficiency is all the way down here, right? All the way down here. We have an inefficiency just over there. And so is price likely to get down to this region? Well, my answer would be no, it's not. I don't think price will get all the way down to here, but using our valid rules of a POI and as to how we determine a bias, this will be this is also a point of interest, right? What makes this an additional confluence for a point of interest is the fact that we have a huge ton of liquidity that's been building up over here, right? So this is known as internal range liquidity in the form of a trend line in this case. And what we have over here is we have liquidity that's building up over here, right? So this is liquidity, right? And this over here represents a reason for lower prices. We have sell-side liquidity over here, which could force price to tap into an inefficiency over here before heading higher. Now, I want to bring to your attention that this scenario down here is only likely if we see price break this low over here, right? So this low over here is important to notice, right? This low over here is valid. If this low gets broken, then we could see lower prices down to 82.41, but I don't think this is very likely, as I've established. Again, there's reason for it, there's confluence for it, because we have a liquidity pool over here, but the overall scenario for now, the more likely scenario is the price to either react off this daily POI, or worst case scenario, we could see somewhat of a reaction from this discounted zone before continuing higher. So this is my overall outlooks on NZD JPY. Let's quickly go down to the 4-hour time frame, because I'm sure a lot of people want to know what I think of the 4-hour. So if I go down to the 4-hour, what do we currently see? Well, as we can expect, like as price heads down towards the daily discount, we're going to have price breaking structure just over here, right? So we see a 4-hour break of structure just over here. So price delivered a high, a low, a high up here, and this now created the bearish break of structure just over here in this region. So what we have over here is quite interesting, right? We have price that has delivered a intermediary term low over here. So this here is a low in price. Since then, prices rallied up. So we've seen price rally up, get to some kind of a premium, not completely filling the fair value gap before heading lower. So I think it's a very, very strong possibility we could see price head down to at least this POI over here. Now, from this POI, we need to assess how price behaves. If price does react bullishly, then we can look to take reaccumulation or accumulation buys from this point. But as I mentioned from the daily time frame, because the daily time frame is king, if this low over here gets broken, this low over here, if this low gets broken, then we could see lower prices, potentially sweeping some of this trend line liquidity, okay? But the overall scenario is, of course, longs up to the weekly drawn liquidity, right? So this is my overall outlooks on NZD JPY. So if you like this video, give it a like, give it a thumbs up. If you haven't subscribed already, we have a YouTube channel with tons of knowledge, as you can see. We're also offering free one-to-ones for anyone who's interested to hop on a call with me and see if Liquid FX is a good fit for you. We offer free one-to-one sessions once a week for absolutely anyone of all levels of SMC and ICT. So if that's something you're interested in learning how I look at the markets, how I trade, how I depict the markets from a simplistic ICT and SMC concept, SMC standpoint, feel free to drop me a message or a comment, and I'll be more than happy to get back to each and every one of you. But until then, happy trading and take care.